Why beginner stock traders lose money. Specifically, this is going to be a class on technical analysis for beginners. So let's get started. What is technical analysis? You'll hear this all of the time. What is fundamental analysis? What is technical analysis? They're like the two-headed monsters or the two-headed dragons, right? Fundamental analysis, if we're going to break it down, is if I should buy this stock. Technical analysis is when should I buy a stock or at what price? Because once you've decided that you want to buy something, that's not the end of the inquiry. The next question you should be asking yourself is at what price? Like, for instance, we just talked about Google. Should you buy Google? In my opinion, yes. That is not the end of the question. The question is, when should you buy it? Because right now, Google is at an all-time high. And I think everyone should be buying things at a discount, right? Any asset outside of the stock market, like you should be buying any asset that you intend to hold for a long term at a discount. That is the most important way or the most important question to answer when buying any asset is at what price, right? Because even a company that's going bankrupt, let's give you a hypothetical. So a company is going bankrupt, its stock price is at $20 and it's announced bankruptcy. But when it sells off all of its assets, it's actually worth $20. So should you buy that company? Generally, no. But what if you could get those shares or a portion of the company at $10 a share when you know that liquidation would net you $20 a share? Maybe you should, right? So it just goes to show that what's more important than the quality of the asset is the quality of the price that you buy the asset. Because even bad assets can potentially be worth it at the right price, right? So I think in terms of technical analysis, this is the central question that we're asking. When should I buy a stock or at what price if I've already determined that the fundamentals are good or this is the type of stock that I want to own for the next 5 or 10 years, right? The other question that technical analysis solves is when should I sell a stock, right? So if you've been in something for a long period of time, or if you're swinging something or you're day trading something, when should you sell? Technical analysis is also going to answer that question, right? And what we're really talking about is price action. When you hear that term, like it's a loaded term, but you're going to hear price action, right? So where are people buying and where are people selling a particular stock, an asset, or an ETF, right? So the answer to this question is simple, right? Buy at support, sell at resistance, right? And this is like the phrase or the saying, buy low, sell high. This is essentially saying the same thing, right? Buy at support, sell at resistance. And then so next, it's like we got to define what support and resistance are, right? Support is the price or prices where a stock has shown a history of bouncing or buying in the past, right? This is my definition for it. This is the reason why we're looking at charts. A chart of a stock is just showing you the history of its price action. So you can go look at this chart and see where has it bounced or where have people started buying in the past. When people start buying, the price of a stock goes up. You can also see from that same chart where have people started selling or where has it started falling in the past, right? And you can look at the chart and see the same thing. So when people say support, that's what they mean. Where is a stock going to likely bounce? And resistance, where is a stock going to likely fall? Where are people going to start selling? And from an objective basis, like some people think the stock market is voodoo and you just can't anticipate what's going to happen, but you actually can if you actually study the price of a particular asset. It will show you, hey, 2 weeks ago when this stock got to this particular price, people started selling it and the price started coming down. Maybe you should think about selling it before other people start selling it. And conversely, same thing. You could go look at a couple of months ago and see, hey, at this price, this stock tends to bounce, or at this level, this stock tends to bounce up. Maybe I should set my alert and then get into the stock there instead of at an all-time high. Right. So the four basic tools that I use and I think a beginner should be using to figure out price action or where there is support or where there is resistance to potentially enter a stock on support or sell a stock on resistance. Number one, you need to understand the candles, right? What's the difference between a red candle and a green candle? A red candle is when there is a negative day, meaning that the price is lower than it was at the close of the day before. On a red candle, the top of the wick, the top is going to be the high of the day. The bottom of the wick is going to be the low of the day. The open for a red candle is going to be where the bar closes at the top, and the close is going to be where the bar closes at the bottom, right? And then for a green candle, it's the exact opposite, except for the high and the low. The wick at the top is going to be the high. The wick at the low is going to be the low of the day. And the open is going to be the bar close at the bottom. And then the close is going to be the bar close at the top. And green candles are for when the price or the close of that particular stock is higher than it was the day before. Also, you're going to want to use moving averages. Some people use simple moving averages. I use exponential moving averages that puts more weight on more recent price action. And so I use 4 specifically. I use the 21 EMA. I use the 34 EMA, I use the 50 EMA, and I use the 200 EMA. And I'm thinking about putting the 100 on my chart as well, because I've been seeing a lot of stocks responding to that as well. So in addition to that, Fibonacci retracements that I use to kind of get a sense of how discounted a stock is. They also serve as good levels of support and resistance on many charts where the public or those who are trading seem to use these levels for support and resistance. So I draw Fibonacci retracements on my charts as well. I draw them typically on a 5-year chart because that is generally my investment horizon. I want to hold things in my long-term accounts for at least 5 years. So I'm going to draw fib levels from 5 years. Some people draw them on a year chart. Some people draw them on candles, on a 5-minute candle, on an hour candle. It just depends on what your strategy is and what you're doing. Are you long-term investing? Are you swing trading? Are you day trading? Are you scalping? Right? You might be using these fib levels for different things. And then the last thing that I don't put too much nowadays, I don't even draw too many trend lines. But what I might do is go draw all of the lows and all of the highs on like a monthly or a weekly chart to see if there's some sort of range that a stock is trending in. But I tend to use more moving averages and fib levels. But some people use trend lines as well. All right. So let's get into the chart. Did I throw up Thinkorswim? I don't think I did. Hold on. That's what I forgot to do. And what I wanted to do is kind of go into some specific examples of like, hey, some things that I'm looking at right now. Of course, Thinkorswim is under maintenance, so hopefully it's not tripping. Let me stop this. What happened? There it is. Can you guys see my screen?
Yes, sir.
All right, let me switch to a normal chart. All right, so what am I looking at right now? And I was going to talk about this a little later. Specifically, I'm looking at Eli Lilly. It didn't have great earnings its last report, but look at the last 5 years of this stock, right? If you would have bought 5 years ago at about $155, the thing is at $800 now, right? You would have three, four extra money. So Eli Lilly, I've seen. So look, everyone loves to buy a stock when it's at an all-time high because they have FOMO. But I am looking for the exact opposite thing, right? If we start just from a monthly chart, and this is one of my bonus tips that I was going to say, it's like zoom out, right? If you can zoom out, zoom out. Just so you can see over time, hey, where is something bouncing? So if we're talking about identifying support, if we look on a monthly basis, look at this fib level here that's pre-drawn, that 78.6% range. Look at how many times this is serving as either resistance or support on a monthly level, right? So what level am I potentially looking to get in? Right now, actually, this looks like a decent price if you are really trying to be aggressive with Eli Lilly. But where is my alert? My alert is at $725, which I think is a better price because it would be at a better discount, right? Probably around a 30% discount on an all-time high off Eli Lilly. And I also see candle 1 here on a monthly timeline, candle 2, candle 3, candle 4. And the more touch points it has, the stronger the support, right? So that is my level to enter a leap or to buy shares of Eli Lilly in my long-term account, is if we get close to 725. It's gone all the way down close to 700. That would be like an ideal, but I'm just looking at price action. So this is what I'm saying from like a history of prices. So we had 1 month, 2 month, 3 months, 4 months where the buyer stepped in around this price, 725. That's where I want to get in, or just slightly ahead of that. I want to get in just slightly ahead of where the buyers are. You could also see this level here, which is more aggressive at around 789.50, which we are already at. But then that would be more of an aggressive trade. That would be probably more of a swing for me. I'm looking for more of a greater discount. But, Eli Lilly is already 20% off. I'm looking for another 10% before I would enter the trade. Right. And then, so if we're talking about trading this thing, if now we're talking about resistance, where do I see I want to potentially get out of this trade or start scaling out of my position? Let's say if I bought 2 or 3 Eli Lilly leaps and I bought it down here at 725. A place where I might think about scaling out would either be at 789, because this fib level, look at the resistance here, 1, 2, 3 times where it bounced up and came down. So that's a potential place to scale out. Or if your whole goal is to hold this a little longer, the other point of resistance would be its all-time high at 1, 2, 3. It came up here at 972.53 and bounced down 3 times, right? So where would I buy? 725. Where would I sell? 972.53. At least scaling out of my positions because I like to keep a runner or two. That's essentially how I would make that decision objectively. This is not based upon my opinion, what I think is going to happen. I'm just looking at price action. It's just data. All of these candles, that's what they represent, right? So if we go zoom in to a weekly time frame, same thing. You'll see 725, 1 time, 2 times, 3 times, 4 times, 5 times, 6 times, 7 times, where it's bounced there. That seems to be a good place of support. And once again, this level right here is potentially resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks where it bounced off of this line. And it's serving as support right now if you wanted a more aggressive entry on Eli Lilly, and for a potential swing up to this top where we had 1, 2, 3, 4 weeks. And the more time it touches, the stronger that level is to as resistance or as potential support, right, from a technical standpoint. Another thing that I was looking at the other day, let's look at another stock, is AMD. And I owned this. I sold it a while back and bought some NVIDIA instead, which has been a great trade. The lowest 36.75. So I'm gonna change these fib levels. We zoomed out to a 5-year month chart. Looking at AMD semiconductor stock, I would say it's like number 2 in the space in the AI chip race with NVIDIA. Broadcom is coming up. Broadcom reported monster earnings, but don't quote me on this, but the chips are a little bit different than the chips that like the GPUs that AMD and NVIDIA are producing. But look at this chart. AMD is more volatile, but if you bought it 5 years ago at $36, it's at $126 now. So you would have 4 extra money, approximately 3, 4 extra money. Once again, look at where AMD, where is it, right? It used to be at $227. Now, at where it is currently, it's at 126. That is a really deep discount. That's over a 50% discount right now. So this is a stock that seems to be a stock of the future that is discounted heavily. This might be a time to potentially try and enter AMD if it's a company that you believe in. And from their earnings, I believe they did beat expectations. They're just not Nvidia, right? So it is a company that's growing. It's in a sector that's going to be instrumental to the future, and it's number 2 in the space. And generally, I don't like to invest in anything that's not like number 1 or number 2, with some exceptions. But this is what I'm looking at in terms of AMD. So if I'm looking at price action, once again, I'm on a monthly chart. It appears that the next level is probably right around 123, right? Which actually makes sense because I think I bought this a while back for 120. So if I just draw a line, a price level. So the reason why I'm looking at that level from a monthly standpoint, we got one bounce here a while back. And you really want to look at more recent price action, but also historically, you can see if there's a level where like this served as resistance, this served as resistance here, served as resistance here, resistance here, resistance here, resistance here. And generally, old resistance can turn into new support. It's just a level where there's a lot of buyers or sellers, right? And so here, more recent price action, we had a bounce here. And right here, it seems to be holding. So this is a potential level, but the level that I like even better, that seems to be more apparent, and it's a heavier discount, would be around like $110. If I could get AMD for $110, I think I would love to enter at that price. All right. Wait, what happened? Oops. Put 1,000. Right, somewhere around there, around that fib level. Because if you see how many bounces we've had, 1, 2 in the past, 3, 4. It's served as resistance before as well. That 110 level seems to be a really important level. If we zoom in on a weekly chart to see if we have any more touches, this area right here, it seemed to revolve around that 110 level. Same thing right there where it's consolidating. So that would be like my low to boat price for AMD. If it can get down to 110, then that's when I'm going to think about doing a leap on it, right? And the last one, we kind of looked at this before, Micron. Micron has been consolidating in here, and we're still on a 5-year weekly chart. So that 95 level still looks pretty good for Micron. Where I would really love it though is at this $87 mark where we had one low, two, three, four, and it just bounced off that price there. Right. So you guys understand what I'm saying? Like I'm just looking at the in terms of like
Yes.
where to enter. So it's that's always the question is what price should I buy it at? That's like the central question. Like if I see on all these shows, CNBC, even EYL, at when they're asking in what price should we buy this at? Like go look at the chart. Really, all they are doing is going and looking at the history of the stock. The history of the stock tells you when people have bought this thing in the past. If you are in the sea of buyers, the price is likely going to go up. If you are in the sea of sellers, the price is going to go down. So it's just trying to get something, get an asset when a good asset when it is on sale. Try to find those, and just there's just not a lot of places in the market for that right now because we're in a bull market. So let me go back to my presentation. So we did some chart examples. So bonus tip, zoom out. A lot of people are in these 5 minute charts, these hour charts, these 30-minute charts too long, even the daily chart. Go look at the weekly. Go look at the 5 year monthly chart. Go look at the quarterly chart even. See what the long-term pattern is of that stock, especially if you are investing long-term, right? Zoom out a little bit, get out of the trees, see the entire forest. And especially if you see levels that are holding on a monthly basis or on a weekly basis, those levels are going to be a lot stronger in terms of support and resistance, right? And in terms of building your confidence of whether you should enter or not. That's what gives me confidence. It's just the data. Sometimes I'm right, sometimes I'm wrong, but I've been way more right this year on my long term plays than I've been wrong. And as long as I'm following a particular strategy or making sure that I'm at least not buying at an all time high, that ELF trade, I wouldn't even call it a trade, the ELF investment that I made earlier, it's about at break even now. But when I bought it, it was already 40% off. So even if it goes down a little bit, I'm more fine with that rather than the person that bought ELF when it was like I think what $200 or wherever it was at an all-time high, or Shopify right now is killing for me. But the person that bought it at an all-time high when it was double what the current price is hates Shopify. But I love it. It's just the price that I got in was completely different. So if you're buying something, like just buy it at a discount, zoom out a little bit and try to determine if it's at a discount and figuring out which levels are the levels where you'd feel more comfortable with buying. And then when it hits that price, pull the trigger. Like if you wait, like I've gotten to the point now too, if it hits my price, I put the order in, right? Within a couple of minutes, unless I'm driving or something, right? I go in, I just put the order in. I already knew where I wanted to buy it. I knew how many shares I wanted to buy. I was watching it for it to get closer to that particular level, and then just put the damn order in. It is what it is. You did the research. Get out your head. Stop thinking so much and just execute. Like you gotta execute. Like a lot of these people that predicted the stock market crash or the market go up, like they didn't get rich off of it because they said it, but they didn't believe in their strategy enough to execute upon it. So if you believe in something, execute it, right? If you're looking for something, like when that price actually hits, just put in the order. And then the second bonus tip I got is check the volume. I use the volume profile tool on Thinkorswim. There's a better one on TradingView that I've been seeing a lot of other people use, where you can go look at over a period of time where has all the volume come in. So you can go see where all the hedge funds are trading, where are the prices, where all the big money's coming in, and then get in right before they typically get into the stock, or sell right before they typically sell the stock. If you see these huge volume spikes at certain level, at certain price levels, where a lot of buying comes in, that also should give you a little bit more confidence that this is the right price to buy or that this is the right price to sell. So weekly stock picks. And this session, I am also, we kind of already gone over this, but also showing you like how I look for my long-term leaps and or long-term investments. So once again, disclaimer, it's in the notes of this video, in the description, but also this is for informational purposes only. This entire YouTube video, any potential trades that I'm making, is for informational purposes only. Do your own research. I am not a financial professional. You should refer all of your trades and investments to your financial advisors. And most importantly, do your own research, trade at your own peril, invest at your own peril. It is risky. You can lose money. Right? So I use Koifin, and for my swing trades, I'm in two right now, or one. Maybe it's just XLC. I think I'm just in an XLC trade right now. I think I got out of my JP Morgan trade last week. I'm in XLC. So there's really only two hot sectors this week. XLY, so that's Tesla. Isaac, you were talking about that. Tesla and Amazon have been going ham. I'm looking for Amazon. I know you like trading Tesla. It has more volatility, but I like trading Amazon because it's usually a smoother run up and down, personally. But yeah, if you're looking for that big alpha, Tesla is your way to go. But I'm looking for a pullback on Amazon specifically. And I haven't looked at Caterpillar. It's the only other one inside of XLY that I tend to trade. Or maybe it's not Caterpillar, but HD, Home Depot. It's the only other thing inside of XLY I tend to trade. And then the other second sector, XLC, communications, of course, because Google's been going ham. Meta, Netflix, those three have been doing relatively decent over the last few days. Disney has pulled back a little bit, so that's kind of off my list. I like the ETF itself. Like I said, I'm already in the trade where I've scaled out twice and have a runner. So I'm currently in XLC right now. XLP, I don't like as much. Maybe Walmart would be the only thing inside of XLP that I like. GDX, I don't like because it's been too volatile. XLK, the only thing that I really like inside of XLK right now is Apple. Everything else is kind of. So really the two major names or where I'm really looking for a pullback on is either XLY itself or Amazon, right? Either taking the entire sector or Amazon itself. So if we look here on Koifin, that was the last 30 days, right? The last month. When I'm looking to enter over like a long-term position or when I'm looking to enter into a long-term position, or if I'm looking for a leap, right? Something that I want to hold for over a year, ideally. Then I'm going to look at this 3-month chart. The reason why I'm looking at XLV is because it is the most discounted. Not only that, do I think healthcare is going to be here in 5 years? Yeah. Do I think the prices of healthcare are going to keep going up? Yeah. After the UNH shooting and whatnot, yeah, the whole industry seen a dip. But do I think they're going to stop making money hand over fist? No, right? The Republicans are coming into power. Do I think Republicans are going to make healthcare more affordable for me? No. Forget your political leanings. I'm just being objective here, right? Republicans are not going to make healthcare more affordable for us. So I think healthcare companies are going to make more money over the next 4 years. And right now, there is a significant pullback. The leading name in the sector for me, and which is probably the most cutting edge, the best like team, is Eli Lilly. I've also been looking at J&J, but I don't. They're one of the biggest players, but I like Eli Lilly or Merck over or Amgen potentially. But really, Lilly is the one that I'm really looking at. That's like the number one player. I also think I recently saw that Novo Nordisk, who makes a lot of the or who makes Ozempic, that there was some big reaction or they found some side effect recently to Ozempic. So Eli Lilly has a competitor to Ozempic that works a little bit better. And if Ozempic is having some bad news about long term effects, then Eli Lilly could potentially take over some of that market, right? So That's just my thinking, and that's why I am looking at Eli Lilly on a pullback. We already looked at that, but I'm looking at or XLV itself, the entire sector, taking the ETF, which would be a lot safer than just taking one name would be to take XLV itself, right? But that's really what I'm looking at from a long term standpoint on a leap. Everything else, right? From a long term standpoint, for me, I want to see a bigger discount. I don't see any discounts in the market right now because we're in a bull market. The only discount I see is on XLV, potentially gold miners, but look at the volatility on that. I'm trying to stay out of that right now, too. So, also, one thing that I wanted to point out is like when things are bad, like right now we're in a bull market. But when things are bad, we tend to rotate into the safety elements of the stock market or the safety sectors. Healthcare is considered one of the safety sectors. Consumer staples, XLP, like Coca-Cola, Pepsi, Procter and Gamble, those are also considered safety sectors. XLU utilities are considered the safety sector. Like healthcare is a safety sector, but it's also a sector that I think that's going to grow tremendously in the future. So that's the best bet as of right now when we're in a bullish market where everyone's invested in tech. They're putting more money into the tech sector. If we do see a big scare or a big pullback or some bad news, I think healthcare is going to be where people rotate because it is the best value right now. It's the best price, right? So if you could get one of the best names like Eli Lilly at a discounted price, I think right now is the time to potentially think about entering, right? At least for me. And that's kind of me building my watch list. I didn't go on the charts today, but I pretty much showed you what I'm looking for. Tesla, Amazon. I'm in XLC, Meta, Google, and maybe Walmart and XLP. Those are the only names I'm thinking about swinging. You'll see the financial sector has fallen off. XLK is kind of neutral. A lot of these things are neutral. And if you're going to short something, think about shorting the metals. The metals are down. So, like Alcoa specifically, potentially FCX, Freeport McMoran. I might think about shorting those next week because those sectors are taking a hit. All right, that's it. Anything y'all want to look at? Kind of a short class today, but just something that I thought we should review. Support, resistance, so that when I say that, you know exactly what I mean, and that
Let's
ideally.
review Amazon real quick since you like Amazon more. I want to see what.
Can you see my screen?
Yeah.
Amazon, AMZN at an all-time high, right? Love Amazon for a long-term trade. Don't love it to buy it right now. So, but it's hit all-time. A lot of these stocks, that's what I'm saying. Like, Amazon is a great stock to buy. Should you buy it at an all-time high at 230? I don't think so. But you should buy it. The question is where. You're talking about swing trading, or are you talking about long term?
Probably swing trading at this point right now because it's at all time high.
All right, we swing trading. For me, it just depends on what day. I'm looking for extreme exhaustion on a particular day. So just because there's a level there doesn't mean I'm going to buy it there. So let me go to my. I would really love it at like right here. Because this is like, yes, this is potentially. So once again, we're using our technical analysis. This candle right here serves as support. But this is very weak support for me because I don't see multiple times that it hit this level. I only see it hit at this level once, right? So it's weak. If I would have saw a candle here that hit it twice and then another candle here that hit it 3 times, I would be more confident about this level. So what I would be looking for is a big pullback on Amazon, like back to like 220.50. Like on Monday. If I were to get a big candle drop to 220.50 at this level where we see here it hit that level, it served as support here, and there it served as resistance, and it served as resistance. So this is more of an important level for me. So if it can get to 22.50, that's where like that would be an amazing entry for me on Monday. If we get another one of these little small candles, that level might move down a little further the next day to like 218, right? Because I see another two levels right there. Right. So that's pretty much what I'm doing. I'm looking for extreme exhaustion, ideally on a 5 minute chart, an hour chart, where I see, hey, the RSI level on a 5 minute or a hour chart goes down below 30, which means it's exhausted. And I want to see a level where there's a history of buyers picking this damn thing up. So right now, you have this. This would be more of an aggressive level at 22, 40, 20, but I don't like this one candle there. There's not enough support for me. I'd rather grab it where it's more exhausted at 22.50, where it's more likely to bounce. Also, 220 is right there, which is a nice round number, and stocks tend to bounce at those levels. So, like, I love the fact that there's the nice 220 right there, and but I would probably try to enter a little bit before that because it might not get down to 220. So on Monday, that would be my price probably to buy. Amazon would be around 225, and let's go check the volume levels on that particular area. So for me, it's like the volume level is just like additional confirmation. Uh, right, actually, yeah. There's there's a little spike of volume right there and right there. So actually, yeah, right there at 220. So really 220. If I'm being real, like if Amazon over the next day or two has a big candle down that touches that 220, that's probably when I'll try to enter. And then if it has these little small candles day by day, the other big level that I'm seeing where all this volume is around 218.50, 218.33. All right. And that's all I'm looking just like as additional confirmation. But yeah, that 220 level is going to be really important on Amazon. So that would be like the Godfather price. If you could swing it at 220 over this next week and on a big red candle day, that's where I'm going to be entering. Where I probably size up is going to be around 220. And
Where do you find the volume tool
well,
on
so
Thinkorswim?
this is not as great as the one on TradingView, but if you can you see my screen?
Yep.
You see where it says volume profile?
No.
Oh, hold on. I gotta share another screen for y'all because it be tripping sometimes. Let me pull that up. Bam. Where's the you see this one now? The studies?
Yeah.
This volume profile one right here. If you just type in profile, bam, click that, bring that over there. And so what I've noticed on Thinkorswim that it's based upon your chart time, right? I don't even change it, right? I just keep it like as the in terms of the normal settings. So
Mm-hmm.
I just put that on, click OK, and what will happen is you'll see this volume here. See me, I do mine on an hour chart because typically I tend to I tend to get in. I look at the 5 minute, I look at the hour, and I look at the daily chart when I'm trying to enter a trade. Even if it's a long term trade, I'm looking at like the recent price action to try and get like a better entry. But the hourly chart for swings for me, I put 20 days here and on 1 hour. So what it's showing me is over the last 20 days, where has most of the volume been, right? So from a swing trading perspective, because I'm usually in my trades for like the goal is to be in it for 2 or 3 weeks if it's going in the right direction. So 20 days, 20 trading days is about what, 3 weeks, 3, 4 weeks. So I want to see where the most volume has been over the last 3 or 4 weeks because that's potentially going to give me more insight as to where something's going to bounce or for that matter where people are going to start selling because the volume could represent a lot of selling or a lot of buying, right? They don't tell you which side is which side. You would probably need to do some sort of level two analysis or do some tape reading for that if you're doing that all throughout the day. But we're looking right here. You see where it bounced off and came down. So there's a lot of volume there. There's probably a lot of sellers here, right? Versus down here where it bounced and came up, there are a lot of buyers here. You don't necessarily know where like which is which, but there's an indication if something's exhausted and you see, hey, a lot of buyers tend to come in at 220, at least more buyers than at all these levels. So there's probably going to be some buyers camped out at 220. And then if it breaks that 220 level and comes down, there's going to be some more buyers, a lot of buyers probably camped out at 218. Potentially sellers too, but it's just showing you this is a level previously where a lot of volume buying or selling came into the market. So if something's extremely exhausted already for the day, it's down close to what its true range is supposed to be. It's already like near its average true range, and I see a lot of volume there. That's going to give me more confidence to potentially buy at that level. And what I need to start getting better at is looking at these levels and where to sell. Because there are sometimes, and a lot of this is just like me driving, taking my kid to school, not being available in the middle of the workday, and something hits my price target. I should have got out of half of my position and then I missed it, you know. So, which is why I'm more so going to longer time frames because I'm finding it harder and harder to get to a computer or keep the computer up, and also having a full time gig at the same time. Yeah. Right. All right. Anything else y'all want to look at?
I'm here. I have a couple of
Yeah.
questions.
Yep. Go ahead.
Well, and I probably should already know this. Do you guys do individual stocks as well as ETFs?
Yeah, I do. I do pretty much any, well, except for futures like ETF. Like I own. For me, it just depends. I think ETFs are safer. I own it. Like I'm in an XLC trade right now, so I'm trading an ETF. I own XBI. I own SPY. I own the Qs. Right. Those are the two that I usually trade. I don't trade. I don't hold the Dow as much, but like the Qs, which is mostly the tech sector, and SPY, which is the general stock market, I do own some shares of that as well. Um, and it's really the same thing. These are going to be safer bets, but like I've been looking for more alpha rather than safety, which is why I've
Yeah.
been doing Shopify, Nvidia, Google. Like that has been giving me way more alpha, where like my account is up, this year. It's up.
But you recommend doing both since there's safety with one though?
I don't really have a recommendation. It's more so like, what's your strategy? Some people love dividend stocks because they love the cash. It's like having real estate where you get a monthly payment or a quarterly payment or whatever. So it just really depends on your strategy. Like, I don't know. And your age. Like, are you somebody older and you're not trying to get a bunch of alpha? Are you more conservative where you would die if like you lost 20% or something? Then stick with an ETF. But for me, like I'm okay with some drawdowns. Like if you look at ASML right now, that is my weakest play right now. But I've told you guys a million times I love the company. They have a monopoly in the laser production semiconductor like machine sector. They are the ones that build the machines to build more semis. So yes, they're down. They didn't have great earnings. I wish I would have bought it at a lower price. I still got it at a discount from like the $1,100 price. My trade price is 888 and it's at 718. It's my worst trade or my worst position right now. but I have a 5 year time frame. So I'm okay with
Yeah.
this drawdown here, 15, 20% when everything else, Costco has been killing, reported good earnings. So Costco's up, my leaps are up. Nvidia's been smashing since we bought it. Shopify is up. Spy is up. So I'm okay with having a company in there that isn't doing so well. Elf, remember Isaac? We bought it, it went down, and now it's back to even, right? And because
Yes, sir.
the earnings have been crazy, like, and my main hypothesis on ELF, eyes, lips, and face, is that I looked at their earnings. I know how big the beauty and like makeup space is, and they're only making like $300 million a year, which is relatively small for a big beauty brand. They could easily get to a billion or more and still be considered a small beauty brand. So like I just saw the growth potential. I talked to my wife. She says she's been seeing it at more counters and more stores. So I'm like, oh, that's the play. It was at a discount. It came down, and then the last earnings report were great. All of the they raised the target prices. A lot of the ratings and analysts raised the target price for it. So it's been kind of steady now, but it's still a long term play. Like my underlying thesis for why I bought ELF and ASML have not changed. So I'm willing to take the volatility on it. Like it is what it is. Instead of panicking if I'm down $1,000 or $2,000, like that's just my strategy. I want to hold these for 5 years. I don't think semiconductors are going to become less important in 5 years. I just don't.
Another question.
Yeah.
Has any new information come forth to make you change your position on cryptocurrency?
I don't really have a position on crypto. Once again, it's the same thing. Bitcoin is at $100,000. I want it if it drops to 40,000. So when Bitcoin gets to $40,000, I'll buy some.
All right.
It's an asset, right? I'm not going to buy anything at an all time high. I want to see a significant pullback. And if you look at the technicals of Bitcoin, it has 60% pullbacks. It's really volatile. So I would feel a lot safer with my money if I bought it at 40,000 or 50,000 than at 100,000.
Do you know what the projections are?
No, I've just been looking at the price action on it. That's
Yeah, because the thing is, it's supposed to be the next big thing. So I'm wondering if the projection margin is way far further than the pullbacks.
Well, so
Would that make you interested?
that's always the question is, so I just showed you Eli Lilly. So you could get it right now. This is a good significant pullback where it is right now. Or you could wait. You might miss it waiting. Or like we were talking earlier with Ange, right? Ange was talking about buying Google. Remember it was this day. I don't know if you remember, Ange. It was literally this day we were talking about it.
Yeah.
Yep. That's just gone. Right? You could have been waiting for $5 more and nope, it's off. So that's the central question is how aggressive are you and how conservative you are. I've learned over time I'd rather be more conservative. So when I got into Google, I think I got in right here, because I always like to get in at the 200 moving average. So I'm almost certain that I bought my leaps. I think they're right here. I think I bought my leaps on one of these days when it touched. And I got in. And it was only there for a day. Or no, 1, 2, 3. You had 3 days to get in. If you didn't get in these 3 days, it's gone. Bam. Right? And then as a result, my strike price is $80. I thought it was 75. It's $80. And Google is at 189. And like I said, my question right now is we broke this high, right? And this is why I was thinking about not selling, is because typically if something's going to keep coming down, it would have bounced off of this old high right here, but we broke it and we closed above it. So now we have a new all-time high, which means we're making higher highs, which means Google is still bullish, which is why my target at 190, which is where we're at, I'm thinking about still holding because I got 6 months left on my option. But yeah, sometimes you gotta be quick. So, that's what I was gonna do. I was gonna look at Bitcoin. Hold up, what happened? How did I do that? Oops. What happened? I don't know what the hell happened. How did I do that? There it is. I don't know how I made myself all big like that. Oh, okay. So let's just look at BTC. Just go look at a Yahoo or Google chart, right? You look at 5 years. So my thing is just like looking for that pullback. So right here, Bitcoin hit a top at 64,000. Then came all the way down to 19,000. How much of a percentage pullback was that? 19,000 divided by 64,000. That was a 70% pullback. So if I'm buying Bitcoin at the heights right here, that is how much I would be afraid of, is that it could go down 60 to 70%. So the reason why 40K is my price, because look at price action. We had a high here, right? Bounced off 40. It looked like it hovered around 40 again. Right here is around 40 again. So my ideal entry on Bitcoin would be around 40,000, because I see some support and resistance. We don't have candles in this chart, but look at where the resistance and the support is on Bitcoin. If you want it to be more aggressive, 60,000. Because look, 60,000, 60,000, and 60,000. That would be the more aggressive entry. A more conservative entry would be 40. So that's my price. If Bitcoin gets down to around 40,000, then that's when I'll think about buying.
Gotcha.
Right. And this is with any asset. You could do this with home price sales. You could do this with OnlyFans subscriptions. Like, go look at the
I'm
price.
dying.
Go look for this. Ian always for any asset, any price. Like, you want to buy at a discount, and so that's all. That's the only thing I'm looking at is, hey, great, Bitcoin's a great asset. You could get lucky and it could go up to 200,000 buying it at 100,000. But is the probability high that that's going to happen? No. And I only like to trade high probabilities. So if Bitcoin gets down to 40,000 at some point in time and everyone's scared it's going to crash and whatnot, then that's when I'll be buying. You know,
Gotcha.
when everyone's scared it's going to crash. But if everyone right now, the fact that everyone's talking about it, that's from stuff. I want to be trading stuff that nobody's talking about Eli Lilly right now. You know, that's when I want to hop into stuff. When I hopped into Shopify, nobody was talking about Shopify. When I hopped into Google, everyone, remember I did that episode where everyone was talking about Google is going to die, the search engine is over. Remember I did that episode? And I'm like, that's when I want to buy. When everyone's saying that this company that makes $100 billion every quarter is going to die all of a sudden, it's like, no, that's not the case. Like, that doesn't make any sense to me. But that's when everyone is saying it's terrible, or when no one's paying attention to it, that's when I want to hop in. When everyone's paying attention to some shit, that's when I'm scared. That's if I own Bitcoin, that's when I'd be thinking about selling a portion of it. Is when everyone is talking about it. Like, I want to be in a corner of the market that nobody's really talking about, and then I want to get there before the train leaves. I don't want to be chasing the train. I want to hop on the train before it leaves the station, and then have everyone else chase the train that pushes the price up. But right now, that train is left. Like that 60,000 price, that was the mark. That was the. But even then, because look, it consolidated there for a long time, and arguably, this started going up because everybody thought Trump was going to win, right? And he's stated he's going to be pro crypto. But yeah, that 60,000 would be a good price to enter. 40K would be where I would load the boat. And what's crazy is the other coins haven't really been doing that well in comparison to Bitcoin. It's only been Bitcoin. That's been going crazy.
What's the second one? Ethereum.
Yeah, I forgot what though. Right?
Oh,
Not nearly the parabolic move that Bitcoin had. It's up, but it ain't Bitcoin up.
I still remember when that was only $100 though, or something like that.
No, I know. Well, every asset starts like that, but it's like, look, it's barely above. Look, Bitcoin is breaking new all time highs, and Ethereum is barely above its all time high. It's a little bit, but it hasn't had the parabolic move that Bitcoin is. So be careful when you say crypto. I would invest in Bitcoin, but the entire crypto market, not so much. Right? So when people say crypto, that means everything. No, Bitcoin. Bitcoin's up. Crypto ain't. It's up, but it ain't up like Bitcoin. Right? So like I said, I'm not anti Bitcoin. I'm not anti crypto. I'm just anti buying shit at all time highs. All right. Anything else before we leave?
I'm good.
All right, fellas. That is it. Mo Kama Sunday service. Making it rain without the umbrellas. Teaching you how to be a better trader, investor, so that these stockbrokers don't steal your money. Um, peace. I'll see y'all later.
all right.
Appreciate you, man.
Yeah.
Appreciate you.